Welcome back, future millionaires and billionaires, to Brighter Financial Future. In today's video, I'm going to talk about dividend stock Verizon. Currently, it has a market capitalization of $239 billion, which is actually higher than AT&T. Its dividend yield is 4.34%. It's in my sweet spot of in between anywhere from 3 to 5%. That's where I like to look for dividends, because typically that means it's somewhat safe, but not always. But I think that's a good measurement for dividends. Now, Verizon dividend is below AT&T 7.23%, but I think their dividend is safer than AT&T. Verizon current payout ratio is 56.79%, which is in a healthy range. Typically, I like to look for anything between 40 to 60%. But remember, all industries are different. But for Verizon, I think this is good. Also, another thing I like to look into when I'm considering buying is I like to look at its 52-week high. Verizon current 52-week high is $61.95, and its low is at $48.84. So it's currently valued below its 52-week high, which I think is a fair value at its current rate. Its PE ratio is around 13%, and they have an annual dividend increase of about 2%. Typically, I like to see the number a little bit higher, but it falls in range with AT&T 2% as well. They have increased their dividend for 14 consecutive years, and unfortunately, AT&T actually suspended increasing their dividends, but they're still paying a dividend. So they're both a dividend payer, but right now, Verizon is on its 14th consecutive year of increasing their dividend, and their dividend rate is about 62 cents. That's why the payout ratio is so important. Having a healthy payout ratio typically means the company can actually pay for the dividend. They have a healthy gross profit margin at around 59.49%. And some of the top institutional holders are Vanguard, BlackRock Inc., Morgan Stanley, just to name a few. And if you own any of these mutual funds, here's a couple that actually have Verizon in their shares. If you bought the Fidelity 500 Index Fund, which I recommended in one of my other videos, you'll own a piece of Verizon. Also, the Vanguard Total Stock Market Index Fund. Also, iShares Core. If you own any of those mutual funds or index funds, you automatically own a piece of Verizon. Now, one thing I love about Verizon is its single-minded focus. They know they're a wireless company, and that's what they focus on, giving you the best wireless service they possibly can. And I used to work for Verizon, and their main motto is quality, 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 but they also care about profits. They care about their numbers. They care about their margins. That's one thing I did learn from them, is that they want to make sure they have the best quality, but they also want to make the most money. Right now, if you compare AT&T to Verizon, AT&T, their feature is a streaming business. So if you believe in streaming, HBO Max, you'll go with AT&T. But if you believe in 5G, now AT&T is going to have 5G as well, but Verizon is really focused on building out their 5G technology. So that's really the tale of the two stories. Overall, I think Verizon is a solid company. I think right now its current price is the fair price. Anything under 60, I think is fair. For me, I'm definitely going to reinvest my dividends into the company. I may buy more shares at its current valuation, but I might hold off until it reaches maybe 55, if it even gets to 55. But I think right now it has a fair valuation. Keep in mind, I am a Verizon shareholder and I'm long on this company. I do not plan on selling at all. If anything, I'm going to buy more shares. But right now, I'm definitely holding and I'm reinvesting the dividends. I already put an alert if the price dips to my sweet spot. So that's my plan for Verizon. And one thing I love about dividend stocks is investing into the future. So one day, these dividend stocks will actually pay for my bills. If you put $1,000 into Verizon stock, you will own roughly 17 shares. That 17 shares equal $42.67 in dividend payouts yearly. So if nothing changes and they're able to continue to increase their dividend by 2%, that $42.67 will be raised up 2% year over year. So keep that in mind. And then if you reinvest that money, it will help increase your dividend income even faster. I know you love the sound of my voice, but as a disclaimer, this show is for entertainment purposes only and not to be considered financial advice. If you really enjoyed this video, hit that like button and subscribe. Until later, have a good one. I'm out.